Yes, a very good morning to all of you. Right, so in this particular video, we are going to discuss the MCQs in the MTP 1 May 25 for the CA Final Audit exams. Okay, right, so MCQ is a very important part of your scoring in the audit paper, so you count a lot upon the MCQ that out of the 30 marks, in the MCQ, I will get so much of the mark and the remaining marks I need to get it from the theory part of the paper. So I always say, like doing the solving of the MCQ is like sharpening the pencil. You need to sharpen the skills. You need to develop your confidence in what you say, choosing and staying with the correct answer. Like once you've selected an answer option as B, then you should not be like, oh no, I think it can be A also. Oh, I think, it could be C also. There should be some sort of a confidence, there should be some sort of a thought process which would go in the selection of the correct answer. And the more we practice the MCQ, obviously, the more we sharpen our skills for the MCQ over there. Right? We've also recently launched our MCQ app, the Aarti Lahoti MCQ app, wherein it is browser based also. So you can download the app also, as well as you can, attempt those MCQs on the browser. And all the MCQs which have been released by ICAI, all the study material and then the booklet and the MTP, RTP, all suggested also now they've started releasing. Right? So around 1300 plus MCQs are put over there. And on a sample basis, you can first, write 1 or 2 exams and see how the result immediately comes out and whether it is user friendly or so. And then once you're okay, like you give a green signal with your selection, okay, oh, this app works for me, then you can do the purchase. I think it is priced at $399 if I'm not wrong. And then once you purchase it, you get the instant access and then you can, start practicing solving the MCQ exams. Right? So it's like, then there is no option of, when you see in a hard copy of the book, you're always tempted to see the answer B and then convince yourself why B should be the option. So here it is like there is no particular answer given in front of you. There are just the radio buttons which you have to select, and once you submit, then you get your report. Right? So because I believe that the biggest crime which you can do in preparing for your MCQs is like looking at the answer beforehand, because then the scope of learning, the margin, that learning curve opportunity for yourself, that you have dusted it away, because then you are just busy convincing yourself. Maybe that answer which is given in the guide might also be incorrect, but you're just convincing why B is the correct answer. Right? So that is also one more reason why I recommend, for you to solve the MCQ, do the MCQ practice from this particular app. Okay, right. So anyways, right now let's come to the discussions of the MCQ. Okay, in the MTP 1 May 25 exams. Okay, right. So write the most appropriate answer. So most appropriate, okay, to answer each of the following MCQ by choosing one of the 4 options given. All MCQs are compulsory and carry 2 marks each. You say, ma'am, we never read this introductory line. You're reading that also. Okay. Right. So question number 1, it seems to be an independent MCQ. Case study MCQs will follow later on. Mukund Hospital is a multi-speciality hospital which has been facing a lot of leakage, pilferage and troubles regarding their inventory maintenance and control. On investigation into the matter, it was found that the uncle who is in charge of the inventory inflow and outflow from the storehouse is also responsible for purchasing and maintaining the inventory records. Oh my God. In internal control and internal check, we study a concept that accounting and custodial function should be segregated. That the person who has access to the asset should not have access to the records in relation to the same. Which basic system of internal control has been violated. Proper authorization of transaction, I don't see any issue with that. Segregation of duties, so we say accounting, custodial functions have not been segregated. Physical control over the assets and independent internal verification. Kya term leke aate hai? Independent internal verification. Nothing like that. It is which basic system of control has been violated. And no single uncle. We always say that, no, okay, what is internal check, internal control ka basic crux over that no single person should handle a transaction from the beginning to the end. Work of one person should be complementary to that of another. It should be independently probed by another. And in spite of this arrangement, there should be no duplication of the work. Okay, right. Question number 2. KNC Bank was having 20 branches all over India by year end 24. At the Mumbai branch of the bank, there were high value cash deposits in one of the current account during 23. Your firm has been appointed as the auditor for 24. The cash collected by the branch was remitted to the currency chest on the very same day. But during the concurrent audit in April itself, the auditor noticed that the branch was unable to show intimation sent via email to the currency chest for the cash remittance. Right? So the procedural part has not been complied with. How the discrepancy of not preserving the intimations of the cash remittances to currency chest by Mumbai branch of the bank should be dealt by the concurrent auditor in his audit report. Select the correct option from the following. Right? So there is a procedural lapse over here. The auditor should report the matter as a major irregularity in his audit report to the management. Auditor should discuss the importance of preserving the hard and soft copy of the email sent for cash remittance with the branch uncle and check for its compliance in the next audit period. Right, so this is softer approach. Auditor should verify the details from email sent to currency chest and close the matter. As it is a minor irregularity, auditor can ignore the same. The moment they say ignore, we always ignore that point. It's a major irregularity, nahi, aasman nahi toot pada hai. Okay, verify the email sent later and close the matter. No, we cannot just close the matter like this. So auditor should discuss the importance of preserving the hard and soft copy of the email sent for cash remittance with the branch uncle and check for its remittance in the compliance in the next audit period. Okay. Next one, question number 3. MLP and company chartered accountant was appointed to conduct the audit of 23-24 for the company RST Limited. CA Kushal was the engagement partner for the said assignment. During the ongoing engagement on the audit at the end of the third quarter, that is December quarter, 2 LR limited review reports were issued by MLP and company. Before the issuance of the third quarter LR report, the management of the company imposed a limitation on the scope of the audit that CA Kushal considered likely to result in the need to express a qualified or a disclaimer on financial statements, and accordingly he requested that management should remove such limitation. However, management refused to remove the said limitation. What was the responsibility of ML and company with respect to the issue of the LR report at the time of resignation? Right, so this is talking about SEBI LODR auditor's resignation. Right, we study if the auditor has resigned within 45 days from the end of the quarter, after 45 days of the end of the quarter, or if the auditor has done the audit or the LR for the first 3 quarters, then before such resignation he has to do the audit LR for the last quarter as well as the audit for the entire year. Now here what does it say? Auditor has done the limited review report for the first 2 quarters. Right, so 2 limited review reports were issued. That means June and September was issued, and now the auditor has resigned. So before resigning he has to issue the report for the December quarter. But if he gives the report for the December quarter, that means he is given the report for the first 3 quarters. Then ultimately he also has to issue the audit report for the entire financial year also. What is JSDM? June, September, December, March, 4 quarters in a year. Okay. Limited review report for 3rd quarter was required to be issued. Undoubtedly, yes. Limited review report was for 3rd quarter was required to be issued, and consequently after its issue, audit report for the full year is also required to be issued. Okay. No further LR was required to be issued as it was already issued for the 2nd quarter at the time of resignation. No. Limited review report for 3rd quarter was required to be issued subject to the terms of engagement. Ye to filler hai. Forget this. Right. So now A or B. Right. So only 3rd quarter. No. Once you issue 3rd quarter, that means you've issued the audit limited review for the first 3 quarters. Then before resignation, you have to issue the audit report for the full year. Okay. Don't in the exam hall, we have to prove our knowledge, we have to prove our audit intelligence. I say, for me, AI is artificial intelligence for the world, but for me, AI is audit intelligence. Okay, I think rather, the CA Final, the summary book which we have, Audit Express, I think, I should rename it as audit intelligence. Okay, so the point is, like right now, I'm discussing this particular point of SEBI LODR, if auditor resigns within 45 days from end of quarter, after 45 45 days from end of quarter, and notwithstanding 1 and 2 above, if the auditor has completed the audit limited review for the first 3 quarters, and आपने ऐसा कुछ कभी नहीं पढ़ा है, you say, ma'am, I have finished studying audit, but it should not happen. But or you say, I'm not able to recollect all this. So rather than just assuming and jumping on to the next question, go to the audit report chapter, go to the provision where they have mentioned regarding the SEBI LODR. You see the provisions over there, come and apply it over there, and then you proceed further. So it's not that you just get convinced, oh yeah, she is saying so, yeah, I am saying it, I am discussing it with you, but you know the best for yourself that whether you have covered this point or not, that whether you need to revisit this particular concept, because it's an opportunity which has come knocking at your door. Okay, oh my God, you might have missed this, but see, there is an MCQ created on this one. Right? So that's what I said. You have to prove yourself in the exam hall. Right now, whatever mistakes, whatever learnings are required to be done, please go for it. Okay. Right. So now coming to a case scenario, right? MCQ 427. Simran Edible Oil Limited is a public company which has the business of manufacturing cooking oil. The company is in the business since last 25 years. The financial results of the company for 22-23 are as under. But now even Modi ji is saying that, use 10% less oil than normal to reduce obesity in the country. Okay. Right. Anyways, that is out of the context over here. Right. So now serial number, particulars, amount, aggregate, outstanding loan, debenture, deposit, turnover, paid up capital, net profit after tax of the company. For 23, Page and Associates were the auditors of the company. The auditor found significant deficiencies in internal control and misrepresentation of the amounts in the area of trade payable. Therefore, the auditor issued the qualified audit report. Next year, management did not wish to reappoint the same auditor, and board of directors recommended Ms. Mansi as the auditor for 23-24 to the members of the company. After the appointment, Ms. Mansi went through the previous year financial statements, audit report, etc., and emphasized the understatement of trade payable balance as a significant audit risk. The auditor set the materiality at 15 lakh for 24. Further, Mansi is in the process of selecting the samples for testing so as to get the samples on which the vendor balance reconciliation can be performed. She is considering the following for the same. Major vendors where the confirmation balance agrees to the general ledger, vendors which have the high volume of business with Simran Edible Oil Limited, vendors with balance of 15 lakh or more outstanding at the year end, and vendor with balance of 15 lakh or less outstanding at the year end. As at 2024, the balance of two vendors as per the company's general ledger and as per the external confirmation which are received from the vendors are as under. Paki Groundnut Seeds Limited 15 lakh as per books of account, confirmation 20 lakh, and Krishi 65 lakh and as per confirmation 80 lakh, right? So they are under recording the payables. Okay. Paki Groundnut, the difference in the balance is due to one of the order received by the company. This order is under dispute as the company claims that the received raw material is of substandard quality. The consignment received was sent back to the vendor on March 30, 2023, so near the year end. And Krishi Sunflower, the difference in the balance is due to the reason of two invoices, 10 and 5, dated 25th and 27th March. As per the accounts payable executive, both the invoices were received on April 3 to 2024, and therefore those were not recorded in the financial statement for 24. So that's a cut-off issue. Ms. Mansi took the example to verify the trade payable balance which were covered in 30% of the population. During the audit, she came across two errors amounting to 12 lakh, right? So 30% population was the sample. 4 lakh was due to one invoice not recorded due to weak inefficient control mechanism, and 8 lakh error was made by Dhruv, an executive who came as a temporary replacement for 1 week in the place of Ms. Kamini, who is a permanent accountant of the company. The mistake was clerical in nature. Based on the above facts, Uttar dijiye. Which item should Ms. Mansi select for testing so as to get the samples on which the vendor balance confirmation can be performed? Right, so major vendors where the confirmation balance agrees to the general ledger, vendors which have the high volume of business, certainly yes, vendors with balance of 15 lakh or more outstanding at the year end because the materiality level is taken to be 15 lakh, but does that mean that you will only select the samples above materiality? No, you will also select those which are below materiality. So vendors with balance of 15 lakh or less outstanding at the year end. Okay, right. So another way. major vendors where the confirmation balance agrees to the general ledger. So if it agrees to the general ledger, maybe you may decide not to select that as a particular sample. So wherever 1 is there, we don't want that as an option. So then what remains with us is B. 2, 3 and 4, right? 2, 3 and 4. Okay, right. Now coming to the next one. How can Miss Mansi audit the OE of control around the accounting of the trade payable? Right. So recalculating aging of trade payable to identify the balance which may not agree with the audit evidence. So recalculation is more of a substantive procedure. It is not TOC. Operating effectiveness of control means test of control. You have to test the control. So inspection, inquiry, and we do observation and performance. And out of ICAIORR, we do inspection, inquiry, observation and re-performance. So no recalculation. Select samples from the supplier balance based on scientific random sampling approach and verify the third-party evidences, right? So again, this selecting sample and checking it with the third-party evidences, again, that more comes under the substantive procedures, not under checking the OE, the operating effectiveness of control. Then input a fake purchase invoice into the client system to see if it is processed accurately, right? So that is where you're performing the re-performance. And what is the last one? Calculate trade payable days to use in the analytical procedure. So again, that's an analytical procedure, which is more of a substantive procedure. It does not come under your test of control, right? So this re-performance, input a fake purchase invoice into the client system to see if it is processed accurately, right? So that is how you can check the operating effectiveness of the controls around the accounting of the trade payable. Okay, next one, question number 6. What are the audit procedures that Mansi should perform to verify whether the payable balance of Krishi Sunflower Seeds Limited are correctly recorded in the financial statements, right? So Krishi Sunflower, what had happened over there? It says the invoices were received on the 3rd of April. And the 27th March ka invoices were received on 3rd April. Right? So send a confirmation to Krishi Sunflowers to request to confirm the outstanding balance, verify the bank payments for the period of post March 31 for any evidence of the payment of invoice, review the listing of the purchase order to confirm whether it pertains to the current year or whether it pertains to the next financial year, inspect the GRN to determine the date of receipt of the raw material, right? So confirmation, then it says bank payment, then it says purchase order or GRN, right? So what we would like to check, we would like to check the GRN, that when actually the goods have been received by the company, when the risks and rewards of ownership have been transferred, and accordingly the purchases are to be recorded, right? So inspect the GRN to determine the date of receipt of the raw material. What would be the proper course of action to be taken by Miss Mansi for two errors amounting to 4 lakh and 8 lakh in the given scenario? Right, so 4 lakh was on account of the invoice not being recorded and 8 lakh was clerical in nature. So now what does it say? What would be the proper course of action? The total amount of error is below materiality. So 15 lakh is materiality and therefore it should not be considered or further work upon. Mansi should ask Simran Edible Oil to adjust 12 lakh in the payable balance and rectify the same. So one, it says it should not be considered. We don't consider this point. And then ask Simran to adjust 12 lakh. Okay. Different set of samples represent the same amount should be selected to check whether same errors are getting repeated. If it is not, then the observation should be waived off. So when they say waive off, we waive off this option. And what do they say? That they checked only 30% of the population in which they found out these two errors of 12 lakh. So the impact of the errors noted in the audit of the sample test of detail should be projected and extrapolated across the whole population. Right? So it says rectify the same, that will come later. But first, what does it say? Project and extrapolate across the whole population. Right? So project and extrapolate across the whole population. Right? So D is the correct option over there. Right. So now coming to the next one, case scenario 2, MCQ 8 to 11. Karma Limited got incorporated in 1980s as a private limited company and started its business into two segments, printing and construction. The two business activities were completely different, but both were managed very well and the company grew significantly over a period of time. In the year 2001, the company got converted into a public company and in 2008, the company got listed on BSE. The turnover of the company was increasing, the margins were not increasing as per the expectations of the management, and the management analyzed this aspect and realized that the margins were not so high in the case of the printing segment. The company decided to focus more on the construction business and included infrastructure in its line of business. This was also because of the fact that the government policies were favorable towards the infrastructure sector. Eventually, the company decided to sell its printing segment in 2020. The new investor, that is the buyer for the printing segment, carried out a due diligence of the printing business involving various aspects, and the company sold the segment in January 2021. Since the business of the company included infrastructure and it involves transactions with government officials also, the management suspected certain suspicious transactions for which it decided to carry out the forensic accounting in 22. During the audit, certain transactions were identified as highly risky, on which the management discussed and set up certain new processes and stringent controls so that the business can function in an efficient manner. For 2024, due diligence was done for the company, which impacted the company significantly in terms of its reputation in business. The company lost some significant contracts during the process of investigation itself. Right? So due diligence is also a type of investigation only. At the time of due diligence review, the reviewer assessed the business feasibility also so as to assess whether the current business would be more beneficial in future or not. The management of Karma Limited did not understand this perspective. The management argued that the reviewer has no power to assess the business feasibility as the company was running a profitable business for many years. The company had various dishum going on, including those related to matter of taxation. The company had taken consultations in respect of those litigations from professionals and renowned legal tax consultants. The reviewer for due diligence reviewed these consultation documents and also asked for the documents related to these matters. Further, he also suggested that the decision taken by the company in some of the matters was not correct. At the time of investigation, the reviewer asked about the background of the promoters of the company. The management explained that there was no need for this investigation. Further, the management explained that the company had already gone through the process of due diligence and forensic accounting in the previous year, and there was no doubt raised on the promoters of the company. So the background of the promoters cannot be shared with the reviewer. So full due diligence, investigation, forensic accounting, chapter 17 content put together. Based on the above facts, answered the following. The management argued that the reviewer has no power to assess the business feasibility as the company has been running a profitable business for many years. Which of the following statements should be correct? Contention of the management was correct? No. The reviewer has no power to assess the business. We to have all power. Reviewer was correct as due diligence covers assessment of business feasibility as well. Okay. Reviewer was correct as due diligence covers assessment of business feasibility as well. However, as the company was doing this business for decades, it should not have been carried out by the reviewer. No. Management was correct. No. Should have discussed the same with the investor as a part of the sale contract. Kuch bhi. Reviewer was correct. Due diligence covers assessment of business feasibility as well. Oh my God, amazing. Due diligence reviewer was given audited financial statements of the company for 24. However, the reviewer asked for financial statements of 23, which was already audited by the auditors of the company, and the management of the company declined this request. Oh my God, this management is getting very uncomfortable with all the requests of the reviewer. Management is correct. No, auditor is correct. Okay. Reviewer can ask for documents even for the period for which audit is completed. Yes. Reviewer can ask for financial statements for the period for which audit is completed, but he cannot give any statement on them. He can collect the same for his documentation purpose only as per the requirement of the auditing standard. Where auditing standard come here? No. Reviewer has no right to review the financial statements of the period other than the period under review? No. Reviewer can ask for documents even for the period for which audit is completed. Even for the period for which audit is completed. Okay. Next one. Reviewer for due diligence reviewed the consultation documents pertaining to various litigation going on, including those related to matter of taxation, and also asked for the documents related to these matters. Further, he also suggested that the decision taken by the company in some matters was not correct. Reviewer needs to have independent assessment of legal tax cases, and any outcome needs to be discussed with the management. Company should not have provided the documents as those are confidential. No, you have to share it with the auditor. Reviewer can study the tax consultation document but cannot give his opinion as the company already took the opinion from professional consultant. No auditor can give opinion. Reviewer. Tax and legal matters are not a part of the review of due diligence exercise, so this is not a part of our option. So reviewer needs to have an independent assessment of the legal tax cases, and any outcome needs to be discussed with the management. Okay, coming to question number 11. The management may refuse to share the details of the promoters. Comment on this. Since the company has already went through due diligence and the forensic accounting in the previous year, management may refuse to provide promoter details to the reviewer. We don't listen to a no. I mean, generally, the moment they say no, we say qualified disclaimer in an audit. Yeah, management may refuse to provide no. As the background of the promoters has no bearing on the financial statements of the company, reviewer should not ask for the details of the promoters, and management may refuse to provide the same. Since the company went through process of forensic accounting in the past and set up new processes and stringent control, reviewer should not investigate into the background of the promoter. I hope the last point is right, because first 3 points I am saying no only. Contention of the management is not correct. Correct. And the contention of the management is not correct. Auditor, the reviewer, should he also be allowed to look into the details of the promoters, background of the promoters of the company? Very much yes. Okay, coming to the third case scenario, MCQ 12 to 15. CA Herman, a practicing chartered accountant, intends to fill out the multi-purpose empanelment form to be included in the panel for the statutory audit of the bank branches for 24 as hosted by the Professional Development Committee of ICAI. The application process requires the submission of XML files of the personal income tax return along with the computation of income. During the relevant year for which the information is sought, CA Herman had engaged in currency and commodity derivative transaction, declaring the resulting income under business income in her tax return. Clause 11, Part 1 first schedule. Engages in any other business or occupation. Okay. Additionally, Pitch Private Limited approached CA Herman to digitally sign and upload a resignation form related to Mr. Rohit, one of the directors, on the ROC portal. However, the signature of Rohit had been copied and pasted by another director of the company without verifying the authenticity of the resignation letter. CA Herman digitally signed the form, which was then uploaded to the ROC portal. Clause 7, Part 1, second schedule. Does not exercise due diligence or is grossly negligent in the conduct of his professional duties. Okay. Subsequently, so once you've studied these case studies, these you can correlate with the case scenario given over there. Subsequently, CA Herman's actions were brought under the scrutiny where the Director Discipline of ICAI received complaints regarding the alleged misconduct. Upon investigation, he was found out guilty of misconduct, and the competent authority imposed the appropriate penalty in accordance with the provisions of the Chartered Accountants Act 1949. Whether CA Herman will be held guilty of reflecting income from currency commodity derivative as business income? If yes, under which clause? Okay. So Herman will be guilty of misconduct for reflecting income under 1111, will be guilty under 611. 611 is solicitation, right? No, Herman will not be guilty for reflecting income as business income under the Chartered Accountants Act. No, Herman will be guilty under 212. When a clause 2, part 1, second schedule. Clause 2, part 1, second schedule. What does that say? Certifies without examining the related records, right? So not coming over there. It comes under the 1111. Engages in any other business or occupation, currency trading in currency commodity derivatives. Okay, right. Whether Herman will be held liable for uploading the digitally signed resignation letter? If yes, under which clause? Right. So again, we said it is gross negligence under 712. Right. So it says clause 2, part 1, second schedule, that is certifies without examining records. 712. Right. Then 511, that is canvasses, secures, and then 711, which is advertises. Right, so which is the correct one over here? 712. Right, so Herman will be liable for misconduct under clause 7 of the part 1 of the second schedule to the Chartered Accountants Act 1949, before which authority would CA Herman's misconduct be placed for the disciplinary proceeding. Right, so if the matter is related to the first schedule, it comes to the disciplinary board. If it is related to second or both schedule, it comes to the disciplinary committee. Right, so the High Court, the Board of Discipline, the disciplinary committee, or the appellate authority, it is the disciplinary committee. Okay, and what is the minimum punishment which could have been imposed on CA Harman under the Chartered Accountants Act 1949. Minimum punishment: reprimand the member, remove the name of the member permanently or for any period, or impose a fine of up to rupees 5 lakh, suspension of practice for up to 3 months, that's under the first schedule, warning and fine of up to rupees 50,000. There is no such point. So what is minimum punishment? Last time, not to do this again, that is reprimand the member. Okay, right. So if you have found this particular discussion, power packed discussion of MCQ beneficial for you, and you've really been able to engage yourself in this particular discussion, so it would be really kind of you if you could just circulate this particular MCQ video with your other friends who can also be benefited from the same. Right, so thank you so much for your patient listening, and next we are going to discuss the theory questions in the MTP 1 May 25 for CA Final Audit. Thank you once again.